Hey guys, so in 7, I'm going to touch on basic industry knowledge as well as staying compliant while being able to offer genuine value to your customers. So the first way we do this, lesson 1, is just understanding the basic health insurance plans that are out there. The way we kind of break that down is there's 4 main ones and 4 categories is how I like to break it down. The first is you have the Affordable Care Act, or ACA. This is also known as the Marketplace or Obamacare. This is open to anybody, usually the people that qualify with income-based subsidies or have a lot of medical conditions they need coverage for benefit the most because they approve everybody. And usually it's the lowest premium that you'll get if you do qualify for those income-based subsidies. You have essential health benefits required by law. There's 10 of them. 3 main ones that most people know are maternity, substance abuse, and mental health. But then it's also broken down into metal tiers as well. So you have bronze, expanded bronze based off where you are, silver, gold, and even platinum. Really, the main takeaway with the tiers is the higher tiers that you're at, the more expensive the premium is going to be, but it's also going to be a lower deductible option as well. So it's overall a better plan, but you're obviously going to pay for what you get. And then you also have premium tax credits as well and cost sharing reduction. So this basically just boils down to if I have a family of 4 out in Texas, making $100,000 a year, yes, I'm going to get assistance, but it's again not nearly going to be as much as if that family of 4 was in Ohio making, $50,000 for a family of 4, right? So a lot of it is based off of a few factors. Zip code, which is also going to be their county, is really how they gauge it. Next, you have, of course, the age of everybody. Insurance is all about age, aka risk, and then the state, because each state mandates their rates a little bit differently based off of their state government. Now, with that being said, the next one you have is group insurance. Group insurance is broken down to small groups versus large groups. Small groups are less than 50 employees. Typically, the employer can choose how much they're going to contribute. There's no set amount they have to, whereas when it's over 50 employees, it's legally mandated that they have to cover a minimum of 50%. Sometimes they do more, but minimum 50% if they're over 50 employees. From there, they get the option to opt in or out of their health insurance, whether it's a small group or a large group. From there, if they don't meet the deadline and they don't fill out the paperwork, they're not obviously going to be getting the coverage in that time. And then you also have composite versus age-rated premiums. And so if you have a high-risk group, so if it's a bunch of 50-year-olds in construction, that premium typically is going to be a lot higher than if it was a bunch of 20-year-olds working at a coffee shop that are relatively in good shape and don't take any medications at all. So those are the 2 ways that you can gauge the rates for your group insurance. And again, that's really the simplest breakdown of how group insurance works. Medicare plans. So again, you guys know that Medicare 64 and a half or over to qualify. You have hospital you have hospital original Medicare, that's Part A. You have the medical part, that's Part B. You have Medicare Advantage, which is just an alternative to the original Medicare option. And then you have the standalone Part D, which helps them with their prescription coverage, which again, sometimes actually ends up being the most important part of all of this because, the older that you get, the more medications that you're more likely going to be on if you didn't take care of your health. And so Part D normally comes in and helps a lot of the individuals that are over 65 and a half. And then you also have Medicare Supplement as well. And this fills in the gaps of what original Medicare does not do. You also have private insurance. Private insurance is broken down in a few different ways. You have short-term plans. Short-term plans are great to help bridge bridge the gap between individuals that maybe are jumping from an employer plan to an employer plan and having a probationary period. But there's typically rules and regulations off of their renewals, so it's not something that you typically stay on for too long. Usually have lower premiums, higher deductibles, but it's usually intended to help bridge the gap of 2 different full coverage options that you would have in place. Indemnity plans, kind of think of indemnity as fixed amounts. So with an indemnity plan, the best way to look at it is, let's say, for example, your doctor is $150. An indemnity plan would come in and pay a fixed $75 every time that you go into the doctor. So that would leave you paying $75 after every doctor's visit. Seems like a lot, but again, it's better than no insurance. Now, last 2 here we have is a health share ministry. So this is also referred to as a cost sharing plan. Medishare plan is another common name for this as well. The best way to look at this is it's not traditional insurance, so that's why a lot of times people opt for it. It's usually religious based, so it's usually members of a church where they take pool of money, put it into that organization. It's distributed at a wheel of board. So typically there's a few board members that delegate the funds when a claim is submitted. It's more of a reimbursement plan as well for most people, but people enjoy this and prefer this if they have maternal needs, if they just don't want to pay premiums towards the billion-dollar organizations like United or Blue Cross. They usually opt in for something that's more so know where the money is going. It's usually where the trust is developed in the churches, and usually is paid out based off of seniority. And it's backed by any legitimate insurance company. So if they choose not to pay out a claim, there's not really anything you can do at that point. But again, it's still an alternative option for a lot of people that are looking for something that's not traditional health insurance that doesn't, carry the burden of traditional health insurance. And then the last one you have is supplemental policies. So this is just for specific conditions. So sometimes you have a Aflac benefit that's like a critical illness. So if you ever develop cancer, it'll pay you out a lump sum check. Sometimes you'll have accident coverage that's in place. So if you break an arm, instead of having to meet your full max out of pocket, you'll pay like a lower deductible, typically $500 or $1,000, and it'll help cover you if it's only an accident. So it's usually covered for specific conditions in that sense. And so understanding the four key factors there, just take a look, see what plans benefit individuals the most, because it's good to know the entire market, even if you're only specialized in just private or just Medicare or just group or just ACA. Lesson 2, underwriting and enrollment strategies. So the underwriting process usually works one of two ways. You have medical underwriting and you have guaranteed issued requirements or underwriting, if you even want to consider it that. But with medical underwriting, you have health questionnaires, you have pre-existing condition clauses, risk factor assessments, and premium rating factors. So normally what these underwriters will typically do is they will either decide, hey, this person is too unfit, they take too many medications or have too many health conditions for us to approve them, and they'll deny you right off the bat. They'll increase the premium, right? So they'll charge you more off of the conditions that you have right away, or they'll put in a pre-existing condition clause that says, hey, you don't have any surgical benefits for that condition for at least 12 months. Once the 12 months is up, then you can get something like that covered. That's usually how they, as an insurance company, save themselves. And that's how they're able to decide based off of what medications you're taking, how long ago it was. It's a whole laundry list of how they decide whether or not they approve someone. And it's usually backed by some sort of life insurance company or some other company that helps assess the risks. So it is something that is on a paper trail where you can go in and see what's something that's considered an approved basis or something that's not an approval basis. Whereas guaranteed issue, you don't have that issue because ACA marketplace plans are approved everybody, so you don't have to worry about that. The only thing you have to worry about here, you have HIPAA, special enrollment rights. So HIPAA just allows, and Medicare and the state-specific rights, this just let you know that they're all going to be approved, whether you're Medicare, whether you're ACA, as long as you're eligible based off of the conditions that are laid out to you. So for Medicare, 65 and a half, and then based off of whatever state that you're in, different states have different regulations and requirements for you to meet, even if it's a ACA market or a Medicare option that you have available to you. Now, when it comes to enrolling in these plans, the annual enrollment windows are as follows. So everyone knows open enrollment for the ACA common 11/1 to 1/15. That's the time to sign up. Your Medicare enrollment period is 10/15 to 12/7. Your Medicare Advantage, again, this is the alternative. Open enrollment is 1/1 to 3/31. And then you have your group insurance renewal periods. Most companies typically like to renew their policy 2 to 3 months prior to their renewal dates. And that's just to get enough employees to opt in and to get the paperwork out to all the employees to receive them back in time before it automatically renews. Special enrollment qualifications. So this would be for individuals that did not meet, let's use ACA, for example, the 11/1 to 1/15 timeframe. This would be the loss of other coverage in the last 60 days, change in household, like adding marriage, divorce, change in residences, so they switched counties. These would be instances to where they would have a special enrollment period where they would be eligible into hopping on to whatever market it is that they need to enroll in their coverage. in addition to that, lesson 3, industry regulations and ethical selling. So there's a lot of federal regulations that are out there. I'm going to go over these main 4. HIPAA violations. So this is basically, for those of you guys that don't know, HIPAA is the thing that pretty much protects us from blurting out someone else's medical records as an insurance agent or as an insurance company, is how they hold themselves liable. Because again, you own the rights to your own medical history, and nobody is able to have access to that unless authoritatively signed off. Industry regulations and ethical selling. So there's a lot of federal regulations that are in place here. The first one is the HIPAA privacy and security rules. So again, best way to look at HIPAA and what the premise of this is it is your list of medical history and medical information that you have access to, and only you only. Meaning if someone else wants to call and ask, hey, did Susie get a heart transplant last week? To HIPAA, they're not able to discuss that. Lawsuits will be involved if you start disclosing someone else's medical history. Medicare communication and marketing guidelines. So this is basically just being able to market Medicare or not being able to market Medicare before the deadline. The deadline for, again, Medicare, going back to it, is October 15th, which is where people are able to market Medicare. I actually think it's 10-1 when you're able to market it, because, again, it gives you a 2-week head start before Medicare is actually available, which is 10-15. False Claims Act compliance. This is simple. This is basically just understanding that you can't put in fake claims to the insurance company. You will get in big trouble by doing this. The anti-kickback statute awareness. Basically just saying that you can't bribe someone to take a claim or to take a policy. Basically, no bribery available. These are all on a federal level. From a state level, you have insurance department regulations, you have producer license requirements, appointment procedures, and product certification needs. So these would be instances to where you're licensed in a specific state, or you're trying to transact business to where you're appointed with one company and maybe not another company. This is everything that the state would oversee versus from a federal perspective where this is mandated across all 50 states. But again, where the ethical sales comes in is just requiring disclosure. So letting people know the limitations that they have as far as their benefits, if there's any restrictions on their network, PPO, EPO, HMO, or POS, waiting periods when it comes to any pre-existing clauses that they would have. This is where the ethical stuff comes in. If it's going to make or break a sale, always disclose this information. So again, it doesn't bite you in the ass when it comes to the state level and you're getting in trouble for pretty much lying to them, saying something would be covered, or not disclosing a specific waiting period that you knew was important to them. Documentation's requirement. Again, application accuracy, disclosure receipts, client communication, and compliant handling. So this is just being able to understand the accuracy of the application versus what they told you, not fudging everything to make sure the application goes through, communicating with the client on how you're processing his application or her application, and then making sure that you are compliant in every aspect of understanding that this is someone's livelihood that you're messing with. And so if you're trying to tweak things in the sake of getting them approved, that can come back to bite you, and you lose your license and possibly face a hefty fine if you're not following this in the manner that you should be. Lesson 4, you do this all with application review. So verifying this prior to submitting the application. You want to make sure the demographic information is accurate. You want to make sure the health history is complete and accurate and clean, to be honest with you. And if it's not clean, just making sure that you understand the conditions to where it would be okay or to where it would be covered. Premium calculations verifying, so making sure they understand the benefits. With subsidies, sometimes that can be tricky, especially when you get to the last page. So just verifying that it's consistent with what they told you, what their before income tax is, benefit selection, and making sure they understand the benefits that they are getting and the benefits that do come with the plan. Don't show them one plan and then sell them another. I see agents do that all the time. And that's the quickest way to get fired, by just not following ethically. It's also being a terrible person too by doing that. Now, once you have that all, of course, gathered and you have that information verified, now it's time to prepare the client to make sure that the call that they're going to be getting is consistent. They have the documentation that they need. They have any verification questions that are going to be presented to them, consistent with their responses, and making sure that everything is consistent with what you've told them versus what the plan that they're getting. And if there is anybody else after, any other documents they have to verify after, making sure that's a streamlined process all the way through to make sure that you're making yourself look as professional and as knowledgeable on the process as you possibly can, and also making sure that you're not getting in trouble for doing unethical application processing. And so overall, just some things that we'll cover here when it comes to compliance and knowledge in the industry. So the first thing you want to do is you want to obviously have some sense of an identity and eligibility towards the clients. And so making sure that they understand that the information that they have provided is confirmed, making sure the employment and income is confirmed, making sure that the address and contact information is confirmed. Everyone is, aware of the siblings. So making sure that everyone is listed as a son or daughter, whichever that might be. And then making sure, that they understand that within the plan, everything that they have acknowledged and agreed with on the recorded line is what they are getting. So that includes the premium, that includes the benefits, that includes the networks and what limitations it may or may not have, and when they're expected to make their first payment. Because at the end of the day, compliance and industry knowledge form the foundation of ethical, successful insurance sales. And I've heard too many bad, ugly stories of people getting fired for some sleazy sales of trying to squeeze a policy through that is not supposed to go through. And just understanding the why behind each requirement is going to help better serve your clients and make sure that you are not losing your license or being held accountable for something as simple as not verifying the information or lying about what plan they're actually getting. So don't lose your license over something that can easily be fixed with just some due diligence.